Michael Burry on my bingo card of videos I didn't think I would have to make today, folks. Michael Burry out there from The Big Short tweeting out some pretty insane stuff here today, okay, folks? We're going to talk about that at the front of this video, obviously, and what Michael Burry was tweeting, and I mean, pretty darn shocking nonetheless, okay? We're going to talk about an easy money stock that everybody actually loves their product, and it's amazing how few people actually own this stock. I want to discuss that in today's video, okay? We're going to talk about some new numbers in the economy I saw here today. We're going to talk about a stock making a very strange move. The stock keeps moving down. There's something big brewing there, okay? Very, very strange, and I want to show you guys what's going on there, okay? Tesla, new potential factory in the United States coming here very soon. I want to talk about what's going on there, the rumors around that and whatnot. And also I want to talk about China-U.S. relations and some very interesting things I see going on there. So hope you guys enjoy this video. As always, thanks for being subscribed, folks. I appreciate each and every one of you, okay? First off, Michael Burry tweets out here today, "I was wrong to say sell." Unbelievable tweet to for him to send out there here today, here this morning. I mean, absolutely almost shocking to hear somebody, you know, bearish like a Michael Burry to basically say, I was wrong. And it's interesting because if you followed him on Twitter for this past few weeks, he's kind of almost slowly been morphing into this ultimate let's call it capitulation, whatever you want to call it here, tweet. It's just interesting how it was kind of lining up, and it was almost like, wow. And this is what I talk about with a lot of these bears in the market. I've been noticing with a lot of them, they're starting to, I guess you can say, give up. They're starting to, I don't want to say flip bullish, because that's not what I would say with a lot of these bears. But what I have noticed is a lot of them are giving up slowly on their bearish theses. And they're starting to say, these things just aren't going the way we thought. And the reason being is, I mean, you've had almost everything thrown at this market now. The Fed raised the fastest we've ever seen the Fed raise, right? Especially in modern history. You had a sky-high inflation. You had bank failures. You've had all this drama, right? You've had corporations. You have big tech companies layoffs. You have so many things thrown at this market, and we've made it through. And one of the reasons I said recently in a video, the reason this is happening essentially is because we have been through so much trauma in the market that a lot of us investors are just almost like, I won't say numb to the pain, numb to anything that's going on short term, right? We already went through the most dramatic thing. When you talk about a once in a 100-year pandemic, when you talk about shutting down the worldwide economy, there's nothing like above that, right? That's the most traumatic thing, right? And it's like, oh my gosh, like we didn't know what was going to happen in March of 2020. It was thought that everything was going to be closed for 3 years. Everybody was going to go bankrupt. We're going to have unemployment that's going to be 20+% forever. And it was a traumatic time nonetheless, right? We weren't sure how many lives were going to be affected. It was insane, right? So when you come off of that, you know, we almost become desensitized to whatever's going on short term that's bad, right? Yeah, I saw this tweet. Somebody underneath that post basically said, when Burry capitulates, it's time to panic. I was actually thinking that as well. I was like, maybe it might be the time to go all in, put options now at this point in time, man. Because that is a little like, what, Michael Burry's thrown in the towel here. He also tweeted out this. He said, going back to the 1920s, there's never been a buy the effing dip generation like you. Congratulations, right? And it is very fascinating. But why is this, okay? Why do people buy the dip? And why are we better at buying the dip than any previous generations? I have the answer to that. I want to show you this, okay? Let's go back 50 years ago, okay? This was the biggest companies in the United States of America 50 years ago, okay? This was their revenues, this was their profits, okay? So if you add up their revenues, it's about $81 billion for the top five there. You add up their profits, about $5.6 billion in profits for the top five, okay? Now, let's fast forward to today, okay? And I'm only going to take United States corporations. I want to go United States versus United States. The top five United States corporations had $2 trillion of revenue. Yes, you heard me right. $2 trillion and $166 billion of profits 50 years later. Absolutely incredible. Look at this. 50 years ago, five biggest companies combined revenue, 81 billion, five biggest combined profits, 5.6 billion. Today, 2 trillion and 166 trillion. That's a 24x revenue. That's a 29x profits, okay? The bottom line is companies are dramatically better today than they were 50 years ago. So when you talk about previous generations, like in why is this generation of investors buying the dip, right? Because we look at companies and we understand that these companies have far better growth prospects and are extremely more profitable than they used to be. Let's call it like that, right? 29x the profits. That's shocking. No, if you're a little advanced, you might say, well, but also the dollar's been very devalued over the past 50 years. 100% true, okay? But I can tell you, it hasn't been devalued 24x. It hasn't been devalued 29x, okay? Basically, the dollar's been devalued over the past 50 years. Basically it takes about $7 to equal $1 nowadays. Now, some people might debate that and say it actually is more like $4 or $5. I'm not going to debate that. I'd rather go with the high number. So let's say 7x, okay? Still 29x the profits. So the bottom line is companies are not just bringing in far more revenue than they used to many years ago, but in terms of the profitability, it's astronomically more nowadays. Companies are much more well run. They understand how to make profits more. And honestly, a big component of it, folks, is globalization, being able to have these companies make money around the world, having different, let's call it markets, have money. And that's something we might even tie into later in the video when we talk about US-China relations. But the fact is, like, the more people that are doing better, the more money companies are going to have the ability to make. That's the bottom line with this, okay? The bottom line is the more people that have money around the globe, the more companies that can do business around the globe, that just means more revenues, more profits. And when it comes to technology and companies becoming much more profitable, it's like night and day versus companies and the way they used to have to run their businesses, let's say, 40, 50, 60 years ago, right? So that's why we are the buy the dip generation. Now, you may say, why the heck am I showing you Chipotle stock? And there's a very important reason I'm showing you Chipotle stock in this video right now, okay? Palantir stock, between macro tightening and New Deal, stock looks strong in 2023. Look at this incredible in-depth article here. Tesla stock, price cuts are a clear signal of leadership, not competition. Look at this great in-depth article here. Meta platforms, 4 reasons to buy. You might say, where are you getting all these great in-depth articles, bullish, bearish, thesis on stocks? This is called Seeking Alpha Premium, folks. And this is incredible. Not only do you get access to all that, check this out. Ratings for stocks, financials that go back a decade ago. Look at this, 2013 numbers. I can even see through this. Earnings, dividends, valuation metrics, growth metrics, profitability, peers, options. It's incredible. It's all through Seeking Alpha Premium, folks. Now, you might say, this looks like it must cost a lot of money, right? I got them to give you guys a special through my pinned comment down there. $99, and you get access to all that. Unlimited amount of articles to read, bullish, bearish thesis on stocks you're looking into, stocks you're researching, stocks you already personally own, right? It is incredible. And if I think about the value Seeking Alpha has provided me over the years, right? It's incredible. And think about it from this context. If you lose money or make money on a stock, usually the amounts of money can be hundreds, thousands, tens of thousands, maybe even hundreds of thousands of dollars, right? And I can tell you, hearing other people's opinions, they might put something in your head that maybe it wasn't there, right? You might be able to look at a risk factor for a stock that you didn't even see, but because you read maybe a bearish thesis on Seeking Alpha, it maybe clicks and you're like, oh, that's a risk I need to think about, right? Risk reward in the market. I want to thank Seeking Alpha for being there all these years for us, and I want to also thank Seeking Alpha for sponsoring this segment of the video, folks. Take advantage of that deal. It's going to be pinned comment down there, and be amazed. Enjoy all those articles. It's pinned comment, folks. They only got the deal going on right now, so make sure you take advantage. Basically, when it comes to Chipotle stock, this stock has appreciated over 3,400% over the years. 3,400%, right? Since this company basically went public and kind of broke apart from McDonald's back in 2006. If you didn't know, McDonald's actually used to be a huge investor in Chipotle back in the day, okay? But what's important with this is, think about Chipotle, right? Almost everybody loves Chipotle. Like, people love to eat at Chipotle, right? Such a simple stock. Such a simple stock. And look at the gains it's given you. And I try to point some of these stocks out to you guys sometimes because it just goes to show you, you don't need to be in the most complicated, confusing, crazy companies to get the most insane gains you could ever possibly imagine. And I show you guys these stocks. I show you Ulta. I show you Estee Lauder. I show you Monster Beverage. I show you Chipotle, and so many of these various companies that it's just like, they're the simplest companies. And yet they give you the most insane returns you could ever imagine. From a flippin' flapjack and restaurant chain that serves you burritos, and you say, I want steak, I want chicken, I want lettuce. And it's like, oh my gosh, like, how could it be that simple to make so much money in the market? How could it be that simple? And you begin to understand, oh, wow, well, if they expand their restaurants and they get this many restaurants and they make this much profit per restaurant, and then you start running the numbers and it's like, wow, okay, this is actually a way bigger opportunity than I thought it was, right? And the fascinating thing is, right, it's not like it's been a straight up line to get that 3,000+% gain. I mean, there's been plenty of times where the stock was down for months, it was down for years, right? Plenty of times. Significant time periods that if you were a buyer at Chipotle, you had a significant many months or many years to buy the stock. And ultimately, you could have been laughed at many times. I mean, look at how many small dips there were in the stock that lasted a few weeks or a few months, right? Never mind the bigger dips. And so many times you could be laughed at and made fun of and, oh, why are you buying that Chipotle stock? All for what? For a 3,000+% gain, right? Who got the last laugh on that? And so, whenever I kind of look at my accounts and whenever you guys look at your accounts, okay, there's going to be certain time periods it feels like you're making no progress. This is a public account over the past 2 years. We haven't made any progress really, right, in terms of dollar amount in 2 years in this portfolio, right? It's kind of been just stuck there for the last couple of years. I don't trip off that. I'm not worried about that. This portfolio is going to 3 mil, 5 mil, and 10 mil over the coming years. I don't trip off of short term, oh man, this stock's down or my portfolio's down or it's not doing anything here in the short term, something like that. That's just part of this process. There's no such thing as going up straight. That doesn't work like that in the market. You're going to have down years. You're going to have sometimes multiple down years. You're going to have down markets. You're going to have down stocks. You're going to have things that didn't work out for you. That's the bottom line when it comes to this game. And you have to accept that. And if you can't accept that, you can never be a real investor. And you're never going to, I can tell you, reach millionaire status or multimillionaire status. Everybody I know that's super successful understands you're going to have to go through the roller coaster. It's going to be a bumpy ride to get to your, objective. If you take let's say, an international flight, right? And you're flying to somewhere for 20 hours. I can promise you, you're going to feel some turbulence here and there. It's not going to be smooth sailing the whole way. You're going to feel some bumpiness. That's the part of the flight, okay? And so that's the bottom line in the market. Like that's part of the process, right? Not every period's going to be like this year has been so far. The public counts up $371,000 so far this year. So far this year. $371,000. Who knows where this year shakes out? I don't know. We'll see. Is it a $500,000 year, $1 million year? I don't know, okay? We'll see how it all shakes out this year. But the bottom line is, like, I understand it's not always going to be like that. Just like it's not always going to be where the account's stagnant for a 2 year span. That's just part of the process, man. And if you can't accept that, you can never be a real investor and you can't be a real player in this game. It is the way it is, right? No different than I just pulled you up Chipotle stock, giving you 3,000+% return over the last, 15, 17 years or whatever. And meanwhile, you've had plenty of down periods in that stock. That's part of the process in the market. That's part of the process in stock market. Like, you just have to accept that, right? And I take it back to, basically, I always show the public account all these years, ever since I started the public account, right? In every single episode. And I look back at this account. This was 4 years ago, roughly, right? Almost 4 years to the day. And, I mean, today's what, the 30th? This was recorded March 29, 2019. That a portfolio it didn't even have $250,000 in it. Now it's $1.4 million. And that's after it's been stagnant for 2 years. It's going to be $3 million. It's going to be $5 million. It's going to be $10 million. I believe it at 100%, okay? Another fascinating thing, look at this, okay? I had put this emoji by Elf Stock in this video. And so I'm guessing that's because I was like so shocked on how fast it was going up. If only I could go back and tell Dad Jeremy, like, dude, don't trip off that move. And this is the public account. I had so many more shares in my private account. Oh my gosh, okay? I wish I could go back in time and say, Jeremy, $10.60 is nothing. Don't even get excited about that, because Elf today, if you didn't know, was like $80 a share. I would have told him, like, dude, don't even get excited about that. So that's why when Honest starts to go on its run this year and then goes on an epic run next year, I'm not even thinking about selling. Like, that stock, I'll hold that for years. Like, I won't even. It's just like you look back and you're like, oh man, I thought that was such a big move, and it's like, dude, that was nothing. That was just the start of things. Okay, next up here. So if you didn't see this, is important for everybody watching this video. Jobless claims edge up to 198,000, higher than expected. And you may say, well, why market green? A lot of stocks green today on a day like that. Isn't that bad news? Not in this market, okay? That's the final step in the process. The final step to this Fed tightening cycle, whatever you want to call it, raising interest rates, we need to see jobless claims continue to edge up, let's call it, over this next 3 to 6 months. That's something we need to see. This is the final stage before the Fed can actually start cutting rates. They need to see not only inflation come down, but they want to see jobless claims go higher, okay? And so usually in the market, that would be bad news. But in this market, it's the best news possible because it means you're at the final stage of this process to go through. Now, for the Fed, they're just going to have to make sure they start cutting rates before, let's call it jobless claims or unemployment or anything like that goes too high. And they'll have to make sure they kind of get that whole, let's call it game right, where unemployment doesn't go too high because obviously the Fed has two goals. They want to keep prices stable, right? But not only that, well, really, they want to keep prices going up over time. Really, there's always supposed to be inflation built into the system. So that's something to keep in mind. It's like stable, but like going up stable, right? But the other factor obviously is keeping unemployment low. So they're gonna walk this tightrope now at this point in time and make sure they do it. But this has to happen. And so the market actually takes this as a positive. It would be a negative if it came in much lower than expected, because that would worry the market more about, oh, is the Fed going to have to tighten more? We have more inflation, things like that, okay? This is interesting. I don't know if you guys have been keeping track of Charles Schwab. Personally, do I have any money with Charles Schwab? The answer to that is no. I do not have any money personally invested with Charles Schwab. And I don't just mean the stock. I mean, like, using their accounts or anything like that. But it's pretty fascinating, I gotta say. Because this stock just continues to move down lower and lower. And you've got to start to ask yourself, does Wall Street know something here with Charles Schwab that's going wrong? It's very suspicious. Either they're making a huge mistake here with Charles Schwab and just messing up, or there's something going on. I don't know. It's freaky, though. That's all I'll say about that one specifically. That's a freaky move. That one just keeps kind of moving down here. Tesla, my Tesla. If you didn't hear, Tesla's pursuing a U.S. plant with China's dominant battery maker, CATL. Ooh, this is interesting. Tesla's looking to build a battery plant in the United States, according to people familiar with the matter, in what would likely be a controversial arrangement with China's dominant electric vehicle battery manufacturer. The EV maker discussed plans involving that company, right, CATL, with the White House in recent days. Oh boy, said people familiar with the matter. Okay, Tesla representatives sought clarity on the Inflation Reduction Act rules that the Biden administration is finalizing this week, according to some people. Oh, this is very intriguing, folks, okay? Very intriguing. And it's intriguing that Tesla wants to partner with somebody rather than just do it in-house, because we know Tesla likes to do a lot of, almost as much as possible in-house, right? Vertically integrated as much as possible. So this is fascinating, and they're trying to get really like clarification on the Inflation Reduction Act, and that's why they're spending time at the White House and whatnot, and trying to get as much info as possible. Now, and we know when usually, let's say, an administration has something go through, usually they like to announce some deals that are happening and whatnot, right? And I know Trump definitely loved to do that when, he would announce something and then there'd be a deal with this company or whatever. And I definitely think this administration is going to try to follow that blueprint of like, there's something, we finalized something and we already got this company doing it, this company doing it. So we'll see what happens there. But, it sounds credible. I'll be honest, it sounds credible. It sounds like definitely a possibility that Tesla could be into there. And it's intriguing. And we know Tesla's on their way to scaling to many, many millions of cars a year, right? And so if they're going to continue to scale there, they got to continue to build factories. That's the bottom line. And this is interesting because you're seeing something like that, right? And I don't know if you guys saw, but earlier this week, executives in the United States, some of these big name executives, were over in China, basically doing photo ops and talking to the Chinese government and all these things. And so it seems like there wants to be like a cohesion between the United States and China, at least on the economic front, in trying to fix the relationship that has been very broken over the past, I would say, 5 years or so. See, China and the U.S., even though we've never really agreed on how to run our countries and things like that, we have been very close economically for a long period of time. That wasn't until about 5 years ago. Around 5-6 years ago or so, everything began to change. There became a lot of tension between the two countries, and that has obviously carried through. And now we're seeing these two countries maybe, let's call it, throwing out hey, let's get along again, let's work together again. And it's fascinating to kind of watch this play out. And with that Tesla possibility there, with the executives, Tim Cook going over to China and whatnot, we'll see. But you got to remember with China, I know a lot of us look at China as like, oh, it's big competition for the United States and, the GDP and all that stuff, right? But at the end of the day, you got to understand China is still a developing country. However you want to look at it, China is still a developing country. China's average yearly wages in the in U.S. currency is $15,000, okay? I mean, there's 16-year-olds working at Chick-fil-A making more than $15,000 in the United States of America, right? A year. And so when you look at a number like that, you got to understand China's a developing country, and they still need us. They still need the United States. They still need to partner with not just other countries that, let's say, aren't as friendly with the United States, but they still need it. They still need us, and they still need Europe. And that's the bottom line with that, to continue to develop. You look at something like the United States, right? $53,000 is the average annual salary in the United States. And so China wants to get there someday. And to be honest, I hope China does get there someday. Because at the end of the day, right, you got to understand, when the more folks that have a lot of money in China, the more our companies can make, and the more you can make, and the more opportunity there is. The less people make, the less opportunity there is. It creates an economy that's, if you ask me, if I could have everybody in India, everybody in China, let's say, have an average annual salary of $50,000, it'd be the best thing ever. Because I can tell you, you know how big the economy would be if the average person in India made $50,000 US a year, and if the average annual salary in China was $50,000 a year. Do you know the revenues of big companies? Oh my gosh, it's hard. I can't even fathom it. It's hard to even wrap my head around the net incomes companies would have, the revenues companies would have, if folks were doing that well. And so the thing you got to understand, the worse folks do in China, India, Europe, wherever, it hurts all of us. And it even hurts the United States, and it hurts American corporations, because there's so much opportunity that is, the more people that are doing better. It's just bottom line. Let's say there's 10 people in the world, right? And let's say I've got $100 and everybody else has $1. Okay, that doesn't really do me too good, because now, what am I going to sell them? Something for $1, and then they have no money. That's not going to do me too good. I need a lot of people in this world, right? We all need a lot of people in this world so we can make a lot more money. I mean, if Quick Trip, we only had one customer come through the door every day, we'd be screwed. That wouldn't have worked out so well as a business. But the fact is, we used to have thousands of customers every single day. They used to come in and buy gas, or come in and buy fountain drinks, or whatever it was, right? And so that creates this opportunity where me as a manager back in the day, I can make money from that, right? I can make money, and the corporation can make money, and there could be all these jobs and all these opportunities. And so that's just so important, and you got to understand, the better people do, the better we all do. That's the bottom line with that. And so I think it would be a good thing if we get our relations back in a healthy place, because I really honestly feel like it hasn't been in a healthy place for 5 to 7 years now at this point in time. And both countries, I think, are still much more reliant than we want to admit. That's the bottom line when it kind of comes to that, okay? Now, back to the Michael Burry thing to kind of finish out thoughts here around Michael Burry, right? This is why, at the end of the day, when you're in the market as an investor, you got to stay focused on building out your positions, your portfolio, and not trying to time this market, right? Because at the end of the day, none of these folks can get exactly this is going to happen with the economy. There's so many projections, so many predictions, and we're going to have a recession here. We're going to have a recession here. And it just keeps being wrong and wrong and wrong and wrong and wrong and wrong again, right? And eventually we're going to have a recession. We're going to have a big decline in the market again, where the S&P goes down 20, 30, 40, 50%, whatever. That'll eventually happen. But no one can predict when that's going to happen. And even with Michael Burry, who's seen as a very intelligent man, he's even admitting he was wrong, right? And this is a man that, if you understand, he went through it back in even when he did get the housing crisis right. You got to understand, he was years early to that. He was years early, and his investors wanted their money back. There was a lot of investors that said, "Give me your money, give me my money back," essentially, back in the day, because he was way early. Housing was continuing to boom, and meanwhile he was way off sides, and his fund was losing fortunes of money, and his investors got very impatient. And so you got to understand, even in that situation, he was years early. And so at the end of the day, these are hard things to predict. And in terms of declines and whatnot, and a lot of times also people get greedy with the declines. We saw the NASDAQ go down 37% at the lows, peak to trough last year. And for a lot of people, that wasn't enough. They wanted a NASDAQ down 50% because, gosh, that's what it went down in the great financial crisis. So why shouldn't it go down this time? The same two situations don't go together. That's not the way this works. People get impatient with this stuff, and you know, at the end of the day, stay long, stay in the market. If you want to hedge a little bit, I have some hedges on. Great, you can hedge your portfolio. Put 3 to 5% in some hedges, and so just in case things tank, you make a bunch of money on that. You're able to cash in, let's say put options if you got something like that, and go ahead and throw that money into long position. Fine, okay. As if you're a little more of a sophisticated investor. But other than that, continue to build your portfolios, continue to build these things out, and let it be what it's going to be. Because all these predictions, all these trying to time the market, oh, we're going to sell now, we're going to buy here, because the market's going to sell off here, and then 6 months later, that's when we're going to start buying, and 3 months later, that's when, no, okay, don't play that game. Stay focused. You see great deals out there in the market, take advantage of those deals. I buy every single week. Every single week I'm a buyer in the market. And it's just different stocks. Sometimes I see opportunities here, sometimes I see opportunities there. It just depends on the situation, okay? And so let that, just be something that sticks with you there. I appreciate everybody joining me. As always, make sure you guys take advantage of that insane Seeking Alpha deal for Seeking Alpha Premium here today. That will be pinned comment down there. Do not let that one pass you by. Trust me, that's going to be very, very valuable to you. You'll get a tremendous amount of value out of that. That's pinned comment down there. Appreciate everybody. Much love as always, and have a great day.